winners, floor show traders Scott Pullman and Tom Hayes. Guys, listen, with all that I've just laid out here and what's to come with earnings, et cetera, are you building a fresh or maybe even just updated investment thesis after Walmart unleashed a skunk last night? Or maybe, and Tom Hayes, you can start here, perhaps ahead of big tech earnings.
Yeah, well, I think what you saw is a shift of consumers, particularly at the low end, shifting because they had to spend more on food and energy and less on discretionary items. So you want to move up the food chain. If you're going to have exposure to retail, we like retail without retail risk, and that points to Amazon. They report on Thursday. And the reason we like Amazon, it's been down 40% 7 times in its history. It always works its way back to new highs. This time will be no different. If you look at the AWS and the advertising business alone, they're going to do $45 billion in operating income this year. At a 25 times multiple, that's $1.1 trillion. That's the current value of the company. You get the retail business, Whole Foods, and Prime for free. And that's the way we would play retail on any weakness after Thursday earnings.
Scott, tell me how you feel about what the message comes, what it actually kind of gels with regarding what Walmart said, how other stocks are reacting. And I'm not just talking about retail. Are you tweaking or altering any of your investment thesis for your portfolio and the portfolios you handle?
So first of all, you know, when Walmart came out and made the statement last night, and then today you got the consumer confidence index number. We have the Fed today, tomorrow, and then on Thursday you got GDP. These are all things people are watching very, very carefully. And the fact is that while we had seen an improvement in the market so far this month, and you know this has been the best month so far this year, we're seeing higher lows, higher highs. The fact is we're still remaining defensive because we think we're going to go back. Yes, we'll go down. Maybe we set another set of higher lows, which is what we're hoping for. But we have to see that test and see if it holds before we can turn around and make any type of adjustment. You know, look, the risk levels are just too high. Fact is, we believe that we're in a recession, even if the GDP number comes in, you know, slightly favorable here on Thursday. The fact is, consumers are hurting, and they're hurting because of energy. And that's one of the reasons why we like some of the big warehouse retailers such as BJ's and Costco, because not only are people looking to turn around and bulk up on stuff for lower prices, but they're also benefiting from the fact that they're selling gasoline, and selling gasoline has really been a help for them.
Okay, so let me break out of the retail picture. And Tom, there are entire sectors that are well off those depths that were plumbed since the start of this year. I'm thinking biotech, right? Biotech's up about 30% off the floor. But are you indeed looking at some of these names and saying now they're cheap enough, and we don't care what big tech is going to do? We don't care, you know, Apple, whatever. We'll talk about that in just a minute. You know, I'm more interested in sort of these side window trades.
I agree, Liz. And we've been talking about biotech on your show. It's up 30% since the May lows. We think it's just getting started. And we love this group because they can perform in a slower growth environment historically. We saw the IMF downgraded global GDP today. And the 3 catalysts are very simple. FDA is back to approving regular drugs. They've been focused on COVID for the last 2 years. So those are catalysts. Animal spirits are back. We've seen big multi-billion-dollar deals in the last 2 months, a half dozen, starting with Biohaven, most recently Seagen for $40 billion. And we're at multi-decade low valuations, whether it's forward PE, price to operating cash flow, et cetera. So we think there's tremendous opportunity moving forward in a slower growth environment in biotech, Liz.
Scott, I just want to let our viewers know we just hit a new session low for the Dow Jones Industrials. We're now down 271 points. Folks, this is why I tell you every minute of the final hour counts the most, because we start to see perhaps a momentum in one direction or another. Scott, we're talking a lot about the Fed. We're talking a lot about inflation. We could look at energy. Natural gas is well off the highs of at least this session, but still pretty heady here. I mean, $8.84 in the aftermarket had been more than $9. I think I last looked at it, and we had nat gas at about $9.75. There's so many issues to look at, plus the earnings picture, which is not in the aggregate that bad. I mean, so far, 75% of the S&P companies that have reported have beat on EPS, and 70% have beat on revenue. So are we missing the forest for the trees?
It's the market is forward-looking. It's not rear-looking. And the fact is that people are concerned about what's going to happen in the second half of this year. Back to school sales coming up, the numbers on that are going to be very, very important. And that's also going to point toward what's happening for the holiday season. And people are very, very leery right now because their dollar buying power has shrunk. And, the fact is, as consumers, we can't go out there and buy as much as we were a year ago. And this is what people are looking at as far as their investments as well, because if companies can't do better because we're not spending more, then how are their stocks going to do better?
Well, they had it. They didn't realize how good they had it, right? During the heights of the pandemic, everybody was sitting around on their laptops, Amazon, Walmart. Great to have you both. Scott, Tom, thank you very much.